Paul Major is here from BB Healthcare Trust at a time when it's been a bit of a tough market. Paul, let's start off with what you'd like your investors to know.
Thank you. Yes, as you say, the last few weeks I think have been tough for everybody. We've seen a significant correction across global markets, and it's been linked to a number of factors. I think most of them are macro in nature, many of them related to interest rates, concerns about trade, geopolitical issues and so on. I think for us, we're healthcare investors, and healthcare is a very, very different thing. The drivers of demand in our sector are not economically linked. People get sick, unfortunately, whether the economy is going up or going down, or all through the year. And the developments that drive the healthcare industry forward are scientifically led rather than, again, dependent on the economy itself. So what I would say is the last few weeks we've seen a very significant drawdown in markets, but it's been a natural sort of fear-based correction. So people have taken money out of the equity market, and where they've kept it in, they've tended to move toward larger, more liquid, more boring, frankly, companies. And that's sort of very antithetical to the areas that we invest in. And so we've been hit quite hard in recent weeks. But I guess if I had one message I would want to get out to people, it is the fundamentals of our industry are really not affected by the concerns that are going on right now. Trade barriers are trade barriers, but at the end of the day, healthcare goods and services are essential things. So there are always ways around these things. The demand for the products that the industry has are not going to be impacted necessarily by an economic slowdown. We don't have a large amount of exposure in the companies we invest in to emerging markets, so we're outside of concerns about dollar-denominated debt in emerging markets, and equally most of the companies that we invest in are either cash rich or cash flow positive. So again, the cost of debt to them is generally low, or they don't require it at all. So I would say if you're looking at the market broadly and you're seeing this correction and you're thinking, what's interesting, I would say do look at healthcare, do look at growth healthcare in particular, because these stocks have been battered in this whole process. And actually the fundamentals, when you take a step back in the 30,000 foot view and you say, what's really changed? The answer is very little for us. So we see this actually as a very exciting time for investors, because in many cases in certain subsectors of the market, you look particularly at things like biotechnology or some of the more technology-led areas of healthcare, the more digitally focused parts of medical technology or software and services. Valuations have corrected very significantly, sort of 10, 15, 20% in some cases. And there's no real reason for that. They weren't particularly expensive growth before the market correction, and now they look very attractive. So we're actually, as much as we're disappointed by our recent performance, we're very excited about the opportunities that throws up for us in terms of deploying capital moving forward.
So a lot of opportunities in the macro sense, specifically for BB Healthcare Trust. Can you tell me about the portfolio and the opportunities you see specifically to
Sure. So we run a very concentrated portfolio. We have a maximum of 35 positions that we can hold in the fund. We have just under 30 currently. And we spread that across a number of subsectors that we think are attractive. So the real premise for us that drives our investment processes is the belief that the healthcare industry is structurally challenged by demographic pressures, and the only way as a society that we can really overcome those is to invest in new technologies, new ways of addressing patient need that are significantly cheaper and much more scalable than what we have now. So for example, we know there's already a global shortage of doctors. We know that the population is going to keep growing and aging. We need more doctors. Those doctors don't exist. So you need to create ways for people to interact with doctors less often or more remotely to overcome that problem. So I think areas like that are structurally very exciting for us over the medium to longer term. So I would highlight, given the market drawdown, as I said, that the sort of small and mid-cap biotechnology is particularly interesting. The growthier end and more technology-oriented end of medical technology is particularly interesting, and then some of the things in sort of healthcare, software and services area. So one of the things that's going to happen, we think, over time is that patients, consumers, if you like, they're going to have to take more and more responsibility for managing their own healthcare, and that's going to be led more and more by consumer-oriented devices and things like that. So we see those as, again, very long-term structural growth areas of the market that have been hit particularly hard in this recent pullback. So a lot of potentially exciting opportunities from our perspective.
We were talking about the long term there. It would seem that in the short term you are quite busy. You've issued a lot of shares recently, announced a new prospectus will be coming shortly. What can you tell us about this?
Sure. So in terms of the share issuance, like all investment trusts, we have the ability to issue shares incrementally through a tapping program, and I think more and more investors are recognising what we see, which is that this fundamental need for change, and our vehicle being an opportune way to invest into that. And that's really why we've been seeing the tapping that we've had, along with I think certainly up until the end of September, and the market correction, very good performance. Now, coming back to what I said earlier, clearly we see asset prices right now as being very attractive, and we felt it was an opportune time to raise capital because we can see lots of potential opportunities to deploy additional funds into the areas that we think are particularly attractive. So we thought, take advantage of this significant correction, the valuation opportunities that it throws up.
Obviously, you won't be able to speak about too much publicly just yet, but could you please describe for us the due diligence process, how you're assessing these opportunities?
Sure. So we have an existing portfolio of investments that clearly we like, which is why they're in our portfolio, and there are a number of things that we have on a watch list, if you like. So there are probably 100 companies that we see as being really, really core, interesting opportunities to gain operational gearing exposure to these macro themes within healthcare that we think are particularly exciting. Now, when they come into the fund is really a confluence of different factors. So it's conviction over the outlook, it's degrees of development. So we don't tend to do very early stage companies. We tend to do things where there is robust evidence that they can deliver a product or a service and that is of value to the system. So there might be companies that we're following and waiting to get to a certain stage of development before we choose to invest. But of course, the other important dynamic in all of this is valuation. And at a point where the market has drawn down, then there are going to be more things that meet your valuation criteria than would have been the case several weeks ago.
Finally, we are going to be staying tuned for this new prospectus coming out. Can you put some timelines on things for us? Remind us of those big milestones moving forwards.
Sure. So we will have a prospectus out imminently, and that will obviously have an offer period associated with it, which will run for several weeks. And during that period, we will be obviously engaging with investors and talking about the opportunities that we see. But I would say even beyond that, BB Healthcare is something that trades on the stock exchange. You can invest at any time that you want, and we see the opportunity now, particularly once we get some comfort post the US midterm elections, which I think is one of the key factors that's driven the volatility that we've seen. We hope the investors will once again be more focused on fundamentals, and as I said, this is an industry where you, relative to others, you have a lot of visibility on long-term structural growth. So we remain very convinced that healthcare is one of the most attractive long-term investment opportunities in the market.
Paul Major, thank you very much.
Thank you.